John Griswold here with Griswold Group. Excited to fill you in on what's going on in the San Diego real estate market. So we are seeing supply and demand very much mirror what we were seeing in 2025. So demand is staying relatively on the bottom, sort of on the floor of the graph, really not increasing very much. Mostly that is interest rate driven, and we're seeing supply creep up very similar to what we saw last year. We're slightly lower inventory than what we had this time of year in 2025, just over 5,000 homes. So what that's done is we had a slower market to start the year, pretty standard, over 100 days, and then it increased down to about 70, 65 days. And then with everything going geopolitically, rates kind of went back up. And now we're seeing expected market time on an average of about 80 days. And we should see that slightly increase over the next several months. That's just sort of natural because we've likely already peaked in terms of the amount of buyers that are in the market. And it's going to slowly start to wane as we end the year. Inventory, the amount of homes that are hitting the market, actually doesn't peak for a few more months. Likely, the most homes that are on the market at any one time is usually peaks. Lately, it's been like July and August. Historically, prior to the pandemic, it was actually closer to May. But the data is showing that sellers are taking longer to go on the market, and there just seems to be more of a peak that happens later in the third quarter. So that's what we anticipate will happen this year as well. All eyes are on the Fed. What are they going to do with all of the new data coming out with inflation, with jobs? Are there additional cracks in the economy? What does the Fed want to do? Frankly, they don't want to do anything. They would love to do nothing and keep everything sort of status quo where it is. There's so many variables, price of oil, bond market, what's going on geopolitically. They would rather not insert additional variables into the equation and effectively do nothing. They may be forced to do something as if they are seeing issues with the economy or issues with increased inflation due to military spending and everything else that we're spending money on right now. So we will see what happens. If rates can get back down below 6% like they were for a minute there, we will see a shift in demand, maybe a shift in inventory. It'll be interesting to see if that happens because it may skew what is historically going to happen just in terms of year over year activity just due to secular demand and supply. So we will see what happens with that. As a buyer right now, multiple offers are still a factor if it's an A+ house, especially if it's well priced. There is opportunity out there to buy a house that's been sitting a little bit of time, but it may not be that A+ home. It may be sort of a B, C tier home, atypical floor plan, maybe a little bit of street noise. Maybe it's got a really small yard. There's something about it that not every buyer is interested in, but those are the properties that are sitting longer and may have a little bit of value in terms of getting in at a lower price. With sellers, it's all about pricing. You want to price things right so that they don't sit, because buyers, again, are looking for an opportunity to come in under the asking price if they at all can. That's certainly true right now, but there are a lot of buyers in the market. So if you have any scenarios you want to run by me, or there's anything I can help you with as we get into the second quarter, I'm here, and I'll talk to you on the next one.